G'day guys and welcome to Property News Update. I'm Alegre-Wood and today I'm going to cover the announcement made by Mervyn King and George Osborne, effectively pumping £140 billion into the UK economy. Now the great thing about this, what's been happening so far is we've had this thing called quantitative easing. So £325 billion has been pumped in the previous 4 years effectively to keep the economy afloat. Now most of that money has gone to fund the government debt. So effectively what the Bank of England has done, they've actually produced this money out of thin air, which is what they do and what they can do, okay? So they produced it out of thin air, and then what they've done is they've bought government debt, okay? Effectively bought the bonds that the government issues and pay back over a long period of time. Now what that means is the government then can go spend that money however they want. This is a little bit different. So this 140 billion effectively, and it's 5 billion a month that's available, will actually go towards lending to people and businesses. Okay, so rather than going to governments, it's actually going where it should go. And to be fair, you know, they should have done this a lot earlier. I've been talking about this for years, about investing in, for instance, people being able to buy their own homes. Okay, so what's happened is the mortgage rates have been creeping up, and the reason the mortgage rates have been creeping up for everyone is because the banks are getting squeezed. Okay, there's a new credit crunch on. The new credit crunch is because you can blame the Eurozone crisis, but it's a number of things, okay? The effectiveness or the reason why this has come about is because what's actually happening is all the regulations and all the regulators are saying the banks need more money kept back in their vaults effectively, okay, or on their balance sheets to secure them against shocks, okay? Runs on the banks and things like that. So what that actually means now is the banks have the choice of either lending or keeping that money back. Now they have to keep this. They have to meet these liquidity ratios, they call them. So they've got to keep this money back, all right? So therefore they can't lend it on. So this money, this 140 billion, is specifically to be lent out. Now what that's going to do is put the money where it should be put, okay? It's going to stimulate the economy. So I think it's going to work quite well. As long as they do it right and as long as they actually do it, then, you know, fantastic. So it's 140 billion linked to personal and business lending. So if you've got a business out there, it should get easier to lend. Now, let's make this clear. If you've got bad credit, if you're, you know, a big risk, all this sort of stuff, you're not going to get the money, okay? But for businesses and for people that are in a good situation, you know, they need money to stimulate lending, to employ more staff, to invest, you know, and they're good businesses, they're the people that are going to get this money. Alright, so don't think that all of a sudden you're going to go out and get more credit cards, or you're going to go and get out more personal loans to go out and buy cars or shopping sprees or things like that. I don't think this money is going to turn up there. Where it will turn up is to businesses that vitally need it to be able to employ people. And this is what should have been done, I think, you know, some time ago. I think 2-3 years ago, if this had been done, it would have kept those wheels turning. And the problem is they've left it so late now that is 140 billion enough? Well, we'll see, you know. But I think it's generally, you know, it's a step in the right direction, and, you know, for us as property investors, it's fantastic, okay? Because it's targeting specifically things like first-time buyers and things like mortgages, you know, so that's good for us, because if that stuff gets stimulated, the market can free up, the wheels start turning again as they should. Okay guys, have a great day, and remember, live with passion.